Well, I think hopefully we will see some good news in terms of the CPI inflation data for August. But again, in terms of the July IIP data, well, pretty much at 6.6%, but mildly slower than a 7% that we did see in the last month. Firstly, in terms of just the IIP data, it's seen at 6.6%. The estimates are ranging right between 5 to as high as 8.1%, but more or less we're seeing a majority of the estimates to be below 7%. July IIP would be slightly slower. We're also seeing that the lead indicators in the month of July did slow down slightly. The core sector data did slow down to 6.6% in July versus 7.6% in the last month. The manufacturing PMI also did slow down. The vehicle production data also did grow just around 17% versus 19.4% in June. So more or less the lead indicators are pointing out to a slightly slower IIP data, but manufacturing and electricity output should be supporting the overall IIP data. In terms of the CPI, it's likely to be below 4% mark. To know that RBI's target is at 4% CPI inflation. August CPI is seen at 3.8%. Estimates are ranging between 3.5 to 4.6%. Again, softer food prices during this month may help cool off the headline CPI, but the core CPI data is still likely to remain elevated. And not just that, with the kind of depreciation that we are seeing in terms of the rupee, as well as higher crude oil prices and the strength in the dollar, there is every likelihood that we do see some amount of shocks or some amount of upsurge in terms of the inflationary expectations over the course of the next few months. In fact, the bond markets are already pricing in 2 rate hikes versus expectation of 1 rate hike. But if at all we do see a slower CPI this time at below 4% and a decent amount of growth, maybe we do see RBI to remain on a pause at least in the next monetary policy meet.